Hey, this is Zeke Freeman with Root Architecture and Development. We are out at 285 Bannock today with Jay Feaster with Feaster Realty, and this is a project that we got the opportunity to work with Jay on to help design and put together a really incredibly beautiful project. Today I was just going to sit with Jay a little bit, chat a little bit about his history, how he got into development and this project, and we'll see where it goes from there. Jay, good to see you, man. Yeah. So Jay, if you could, maybe just give a little bit of your background, how you got into development, real estate, and what you're doing now.
Sure. Well, I mean, I got into, real estate the way most people do, running from the law. But no, I just, for a long time, a lot of friends and family and whatnot had kind of encouraged me to get out and be in an industry where I was really close to people. I grew up doodling houses and sneaking into new construction and stuff like that. So I've kind of always geeked out about that. Yeah. And so when I got into real estate, within about a year, I had gone and started working for a builder, which was kind of like the natural progression for me. And that's where I really got interested in the new construction. And we initially started with, a business plan of helping people customize and doing infill homes, single family infill homes. And we were quite successful there for a number of years. I want to say maybe three dozen single family homes. But at the same time, this is right when the market in Denver.
What year was that kind of?
Oh gosh, this is probably 2010.
Okay.
Right? So just like we were just kind of coming off the 2008 thing.
Yeah, things were starting to.
Yeah.
That's kind of like the beginning where we had our grain run here in Denver.
Right. So at the same time as things were starting to pick up on the new construction and prices were starting to escalate and whatnot, we had a few investors come into that construction company and say, hey, well, what can we do? Is there an opportunity here? And with us being based up in Berkeley, which is a northwest suburb of Denver, there was a lot of infill happening or beginning to happen with duplexes.
Yep.
And so we onboarded, the builder onboarded 2 or 3 investors. We did 1 or 2 duplexes. Wildly successful, then 2 or 3 duplexes turned into 4 or 5 duplexes a year and turned into 8 or 10 duplexes a year. And, next thing you know, I was focused so deep on just finding development deals and infill, and I became, a bit of an expert on zoning and what you can and can't do. And, while my role initially was just the real estate, the acquisition of the development lots and then the sale on the backside, I had my eyes and my ears open. I learned a lot of things along the way. And after a while, I really understood a lot of the key components of not just the real estate portion.
Yeah, that whole neighborhood area, we did a lot of duplexes just design-wise. It kind of seemed like right off of Tennyson and then, those kind of couple of streets, Utica, Vrain, just rapidly changed since 2010. That was an interesting time and place, and it seemed to escalate so fast. When you started there, what were you buying lots for, and what did it kind of escalate up to by these last couple of years?
Sure. The first duplex lot we bought was $167,000.
Yeah.
And, it was
2010-ish?
2010.
Okay.
It was a hoarder's house. There was so much junk in and around that guy's house and the yard that after about 2 days of cleaning up, we found 50-gallon barrels of oil that had been sitting there for 20 years in the backyard. There was just under so much debris that we had just initially, so we had an environmental cleanup and all kinds of stuff. But anyway, $167,000. The last one we purchased was $925,000.
Yeah, incredible.
Yeah.
And I imagine that first duplex sell for $920. It was probably 700s or.
Well, we sold. This is back before they were doing the 3-story duplexes.
Okay.
So we did a 2-story duplex with a fully finished basement. So maybe 2,900 square foot, fully finished, 4 or 5 bedrooms, 4 or 5 baths, the whole deal. I want to say we sold those for $465 per side.
Yeah.
Right?
All right.
And, right. And so now we don't do basements, and there's a whole reason for that, which if you want, I can get into that. But we started compensating with the square footage by doing these 3-story units. And that also gave us an opportunity to do, a second outdoor space that was kind of private with rooftop decks and whatnot.
Yeah.
So now we tend to build 3-story, about 2,400 square foot units. And those at the peak probably were selling, I think we sold one for 1.5, and now they're probably in the 1.3 or something.
So what would you say peak was, like a year or two ago?
About two years ago, kind of that, there was that really, really rapid run up, and just right when everyone was outbidding each other by 50, 100 grand, and
no inventory.
There was nothing. So we had locked in a couple sales right around that peak. And then, we're fortunate enough to finish the project and close, and so those were lucrative, to say the least.
So similar duplexes going from 2010 to 2025, we probably went from around 500 to a peak of about 1.5. So almost $1 million difference on similar size projects.
Yeah.
Incredible. And then the cost of land, probably about 200 up to almost $1 million. So 5 times for the cost of the land. What do you think construction costs kind of did roughly, price per square foot in 2010 to what we're building out now?
Well, I would say, you're probably almost triple at this point. And if I were to wrap up the totality of it, meaning the cost of debt service is also included, the cost of permitting and compliance with the city and all those kind of things. It's not just the contractor's fee or what the tile guy charges or what we spend on cabinets, right?
Yeah, a lot of things go into cost of construction.
Right.
It means different things for different people.
So
totally get that.
So all in,
break that.
I would say, the first probably couple duplexes, I bet you they $500,000-$600,000 to build the whole thing.
Okay.
It's been a long time since I tried to think about what those numbers would have been, but certainly 2.5 times.
Yeah.
Yeah.
Now to get that done.
And part of the reason why the value of the land went up so rapidly is from when we first started 2010 to let's say about 2013, Denver had a zoning rule that said any double lot, so any 50-foot lot, because a single lot's 25-foot wide, any double lot, you could technically have 2 homes on it, so or a duplex, right?
Okay.
So we used to be able to go into basically any neighborhood, any of these areas, and we would be able to buy any double lot because...
Is that like pre-blueprint Denver?
Right, pre-2013, right?
Okay.
So, and then they came in and put specific zoning in place that said you can only add, only do 2 units or row homes, and there's a few other zoning codes, in these little pockets or these little strips. And so by taking a neighborhood of, 4,000 homes and putting what was the driving factor for a lot of the development.
Yeah, new density.
Right. And putting it on 4 streets, and 200 homes. You created this, supply and demand. There was no supply, there was still a demand. And so prices started rising and rising and rising. And, there was a while there where it almost seemed like just about every year you were seeing prices go 8, 10, 12%, 8, 10, 12%. And didn't take too many years before, 465 sales were 1.5. So, but yeah. So.
And so where do you think we're at in like this, we've got this, rising cost of construction, we've got this rising, cost of financing. And for a while, it seemed like, you could build and, you would go over budget, but the sale price would just stay ahead.
True. Yes, that was frequent enough.
Yeah.
I say we are in a rebalancing period, meaning, the sales prices on duplexes for what we've been doing maybe hit 1.4.5, 1.5, down to about 1.3 or so. So you've seen things in a variety of different neighborhoods, maybe slide 10 to call it 15, 10 to 15%.
Yep.
And a lot of that was driven by economic factors, and not a Denver economic factor, but a national economic factor. So you had rampant inflation, which has caused the prices of things to go up. And when inflation hits, then all of a sudden your buying power is less for the dollars that you earn. So then labor has had to go up because, you've got, the framer family, they still need to eat and pay their mortgage and pay for gas and all those kinds of things, right? So, those guys making whatever they make, the same amount from one year to the next just wasn't getting them there. So then everybody has to raise prices. Well, in the end, if everybody's raising prices and all the materials raise, well, then the sales price has to raise. And if the construction number has to raise, there's a certain equity requirement into these transactions, and the investors would have to increase their equity. Equity comes at a cost, so then there had to be profit added on top of it. So it was just a compounding of things, and it's like building a hamburger. You don't think putting one slice of onion on it is going to make this thing manageable. But when you add every single thing you want onto it, all of a sudden you end up with something you can't even get your hand around. And so I think that with a slight slipping of, the economy and then inflation and all that kind of adding, it caused a lot of the driving factor, which was people moving from high dollar value states or cities, San Francisco, Los Angeles, New York, and a variety of other different areas where they might have been selling, homes at $1,000 a square foot, $1,200 a square foot. They're moving out of San Francisco and selling the 2-bedroom, 2-bath, and a parking space for $2 million and coming here and doubling the square footage, getting an extra bedroom, getting outdoor space and no HOAs, and being $500,000 less. So, and most people, when the interest rates were low, weren't cashing out and putting the money in their pocket. They were just rolling all of that equity into the new home. And so these people were selling these very expensive properties and moving here, and their payments were just minimal because they weren't financing very much. And 350 days of sunshine and
it's a great place to be.
Lower cost of living compared to where they were coming from. And we had a huge influx for years of Californians, New Yorkers, wherever, right? So, but when everything changes, it doesn't just change in Denver, it changes in San Francisco or whatever that city is. So when all of a sudden they couldn't sell for $1,200 a square foot. In fact, their prices were going down and inventory was going up. They couldn't even sell homes. Well, then all of a sudden that demand here in Denver for all the people moving here for the better life wasn't there, right? The purchasing power of those people was diminished. However, prices didn't slide as much in Denver as they did in a San Francisco or to my knowledge, right? So you would hope that if you see everybody slides 10%, well, you take it on one side, you get it on the other side. But when you're taking it on one side, but you don't get it on the purchase in Denver, well, then that gap really wasn't there. And then on top of that, you're not getting a 3% mortgage anymore. You were 7.25% there for a while. So all of a sudden, payments weren't going to be quite as low as they were. And was it really worth upending something? And a lot of people have just kind of stopped moving to Denver at this point. It was a slowing.
So and Denver's a big area when you talk about it too.
Right.
We've got lots of different pockets, places that have, obviously, hold at a higher price point, some areas that you still got opportunities in. Where do you see the opportunities, in Denver at right now?
Sure.
We went through that kind of Berkeley period, maybe Sloan's and...
Well, I guess one thing I would say, this would be my opinion, is it always seems in kind of metropolitan areas that you have this like ripple effect of densifying and restructuring. So it's like a throwing a pebble in a pond. The first ripple that happens is going to be right in downtown. Over the past 10, 20 years, what have you seen? You've seen all these vacant pieces of land getting picked up and compiled into larger parcels, and then big 30, 40, 50 story, buildings going up, and new restaurants, and the revitalization of the Union Station, and all kinds of things, right? Infrastructure.
Yeah.
And then what does it do? Is then it heads into the next ripple, which is all those neighborhoods that are 5 minutes, 10 minutes away from downtown Denver. And you saw initially revitalization in all of the restaurant districts and things like that. And all these new restaurants came in, and what was kind of neat was that's what people wanted. They wanted a much more pedestrian friendly lifestyle and things like that. So Highlands, Berkeley, Sunnyside, Baker, all these things, right? You all of a sudden have this explosion of coolness. I don't know how to say that. A coolness factor.
And it's all the little walkable, urban areas with the main shops and downtowns. Yeah.
Yeah. So then those kind of conversions happened, and it was breathed, new life into those areas. And then what tended to happen is the higher density zoning kind of, again, starts in downtown Denver and then spills out. So what the Highlands, or Berkeley, let's say, most of the homes in that whole neighborhood are 1 and 2 story homes. And then as that kind of ripple of development hit, that bumped to 3-story homes. Mm-hmm. And so you have infill happening where someone's knocking down an old 800 square foot home and building 3,000, 4,000, 5,000 square feet. I mean, pretty good size homes, or splitting them and doing, instead of 5,000 in one home, it's 2,500 in a half a duplex and 2,500 in another. So where do I think it's going is I think that kind of ripple is kind of now into that kind of next tier. It's pushing out. So you've got, suburban areas, that maybe aren't walkable to restaurants, but there tends to be this trade-off, which is you can get bigger lots. Here in Denver, we're right up against the foothills. Maybe you've got a view of the mountains now, or you're really close to the mountains. Maybe the school district is better. I think a lot of times the school districts are a little bit better out in the suburbs. And so all of a sudden there's this now driving development that's kind of happening in that kind of like third wave area. So
let's talk a little bit about ADUs. We're doing a house right now that we designed, you guys are building, and they've come in. And we started out originally just having a garage on the back, and we ended up adding this ADU on the back. I'm seeing that a lot. I know there's some Colorado legislations that's changing around ADUs. Yeah. What are you seeing with ADUs, and how is that helping or affecting market at all? What's your thoughts there?
Well, I would say initially the idea of the ADU came as a compromise in a number of areas where you had a major demand for these duplexes, but people also didn't necessarily want to kind of lose the single family character of the neighborhood. So a lot of times it would be, you'd have like the restaurant district or the street where all the restaurants are would have this, mixed use and something zoning. And then as soon as you kind of got off of that, a couple streets that would have 2-unit zoning. And then, 2-3 streets past that, you'd have the single family zoning, but then also the ability to do these ADUs. And the idea was, again, you're kind of stepping it down as you move farther away from these kind of high density districts. Mm-hmm. And so I think that there was this initial, exploration into doing that. I definitely am seeing more of them these days because I just think that to some extent people are going through this process of acquiring a new property and in the neighborhood they want to be in, and the existing home doesn't fit what they need, and their budget allows for a much higher valued home, so they're buying the cheaper home in the great neighborhood they want to be in, walkable, and they are working with companies like us, with you. We're scraping those homes, designing the new perfect home, and then there's this future use that they maybe aren't 100% sure what it is, but they're going through the process. It doesn't take you all that much further to add, a mother-in-law suite for, a family that might visit, or maybe you turn it into a rental. I don't know long-term rental laws, how that might work, but I know those have just changed as well. So yeah, but some people are just looking for this detached office space with its own bathroom and a small kitchenette, and some people really do bring clients and stuff into their home, and they want to kind of keep that privacy and like the home team feel of their house. So these being accessed off of the alley with its own parking space and its own private access locked off from the main yard and the main house kind of gives them that best of both worlds.
Yeah. So that'll be interesting to see how this plays out as Colorado law kind of puts this blanket use of ADUs across the state. Whether that's really ends up being that way or some modification form of that within local zoning codes, but I think it's something to kind of keep an eye on, and as people figure out how to utilize that. So let's talk about the process a little bit. Say you've got a homeowner coming to Denver looking to build a custom home. First of all, why a custom home versus buying something that's already existing? Sure. And then what would that process look like working with Feaster?
Yeah. What I've found is so we kind of have these two related but kind of separate businesses. So we have the construction and the development kind of wing of it, where we work with investors, and that's maybe less passion driven, more investors want to see a certain rate of return and that kind of a thing, take advantage of market conditions, right? And then we also work with homeowners that are looking into a certain area with a budget that exceeds available inventory and expectations or needs that exceed that. And so I don't want to say they want what they want, and it's just not there. And I think part of it too is sometimes there are specific needs that people have that go past just beds, baths, and square footage. Some people have needs that revolve around their children, or business needs, or maybe both the primary people that maybe they've got they both work from home, so they actually need two offices, or I don't know, right? There can be a variety of
a lot things of that these days. I think rapidly changing, and that work from home has changed the layout and design of a lot of houses that weren't set up that way. You went to the office.
We've had multi-generational needs where it's not just, hey, we want the house because we want the house. It's like, no, my father is ailing or has dementia or something, right? We need to bring our aging parents into the house so we can care for them. How am I going to do that in a 900 square foot thing? Because I personally want this for my own life, but I'm also trying to accommodate them, right?
There's this largest generation of wealth sits with the baby boomers right now, and as they are retiring, and you have younger families starting. I'm seeing that more and more of combined family situations.
And so what tends to happen is either people already know they want new construction, they have an idea where they want to be, all of a sudden they're with their broker, driving through the neighborhood, and all of a sudden they're seeing Feaster Realty signs and in front of all this new construction, and it gets them to thinking, maybe I should call this guy. Like, what I see, what I can see, what else is out there that maybe I don't see? And so a lot of times these brokers or these individuals will call us and say, hey, this is what we're thinking. I don't know. I mean, is this even possible? Most people don't think it's possible. And we say, well, yeah, it is. It's not, it's not something I can get you into a new home in 2 months. It's a little bit of a process, but in the end, if you're willing to wait for it, you can have the house you want in the location you want, with the design and the finishes and all the little things you really want or need in a home. This is a solution for people. Or it comes via referrals and whatnot, coming in through the regular real estate kind of avenue, because we help a lot of people that they just want a house. They're moving here, they're moving there.
And so what should I expect if I'm coming to you and I've got a reasonable budget, and I know I want to live in this school district because it's a good school district, and I want to be close to all the walkable things. What would that process look like? Sure. What kind of cost and how would that framework come about to figure that out?
This will sound cheesy. What I'm probably not going to do is just ask you how many beds and baths you want, and where do you work? It's a little superficial, and if I feel like that is, how are you ever going to create any kind of real understanding of what someone's wants or needs might be, unless you kind of peel back a few layers to that onion and understand, why are you moving here? What about your current house just is not working for you? New jobs, new whatever, right? Like let's ask some questions, find out what people actually really need. And I think what I've found over the years is that the thing that someone initially says, well, this is me in a nutshell, 2-minute conversation. Yeah, in the end, okay, that might be true. However, there's so many more nuances to that if I had just taken that for granted and just started running in one direction, we would have gone in the wrong direction probably 9 out of 10 times. So the very first thing I would say is that we're going to walk in, we're going to really understand what you need, okay, why you need it, what your goals are, what kind of lifestyle do you want to live? Like, how do you recreate? All these different things. And we're going to understand, hey, Jay, my job is relocating. I need to have a house in 3 months. Okay, we're not building. Like, that's not going to happen. This is a longer process. Are you open to renovating? Maybe we can find that perfect house with the great bones and the layout, and it just, it's got the updated, needs an update in the kitchen, or I don't know what it is, right? So, or are you the type of person that's like, look, I'm just never going to be comfortable doing a construction project in my house. So I need to buy something now, but it really needs to be updated or mostly updated, so it's more move-in ready. That will drive us in certain areas.
And you guys have a construction branch within Feaster, and so if I had a certain budget, are you able to help kind of allocate that budget and say this would be better fit to renovate, better fit to new build? So I think that's one of the nice things that is kind of unique about you guys. And I love that you're missing the architecture piece, because you can come over to Root and we can help you fill that gap. So
totally.
It's a good partnership to work on together.
Well, I think once I've had an initial conversation with somebody where they have said, I have these specific needs, I have a specific location, and my budget is actually reasonable enough my timing is reasonable enough that I can wait for what I want, then that's where you say, okay, look, we're gonna bifurcate our efforts here. One, we need to introduce you to an architect. We need to start understanding what it is this house looks like, so that we can start to give you an initial idea of what the actual construction, not accurate to take it blanket price per square foot. We build it a $275, $300. You can't do that, right? Because then people go, well, I just want like a 1,200 square foot house. You're like, okay, well, the smaller you go, the price per square foot goes up, because you have to absorb all these fixed price costs, and vice versa. You can build at $350 a square foot, but as you go from 4,000 square feet up to 8,000, I don't know, I've never done one that big, but it gets cheaper, right? So, well, sort of.
Unless you're putting that custom wine and the Lamborghini lift, I know people can spend money any way you want.
There's an asterisk. So, I think the bigger thing is like, I want to give people a realistic idea. So oftentimes what I do is I walk them into one of our projects that's maybe almost finished, and I say, without telling me if you love this house, do you like those windows? Do you like these countertops? Do you like the appliance? Do you like the tile work? Do you like the flooring? Tell me about the texture on the wall. Like, if I had this in the layout and the design that you liked, that about what your expectation would be. Okay, good. Well, then I can give you a pretty good idea of what the construction is going to cost. If you come at it from well, I don't really know, and I say, okay, well then let's talk about this finish level and however many square feet, and tell me about roughly what you want to build. Within reason, I can ballpark you a relatively close idea on what the construction portion. There's the land acquisition, then there's the development portion of it.
Well, this has been great, Jay. I appreciate the whole broad overview, taking some time. Sometimes we don't get a chance to do this as much when we're in the drive of getting projects done. We'll do a part 2 here. Hopefully I can get a few more minutes of your time, and we can walk through this beautiful house that you guys have built, talk about some of the special features and things that you guys do when you're finishing out a home, and get to see some of the work that we've done together. So thanks, Jay. Appreciate your time.
Yeah,